Hi, I'm Rick Kahler. Thanks for joining me. Although a president's influence on the economy is pretty limited, their tax plans can affect Americans' personal finances. And given Joe Biden's current lead in the polls and the real possibility that the Democrats could gain control of the Senate, his tax plan ideas may eventually be passed by Congress. Regardless of your political views, it's really not too soon at all to consider the possible implications for your own financial planning. The Trump individual tax cuts are set to expire in 2025 unless they're extended by Congress. Not only is an extension looking pretty doubtful, but the cuts may well be rolled back next year under a Democratic-controlled White House and Congress. That would increase all marginal tax rates, with the top marginal rate going back to just under 40%. The proposal includes a 12.4% payroll tax on any earned income over $400,000 with no cap. This would leave a donut hole, so to speak, with no Social Security payroll tax for wages between the current $137,700 and $400,000. If you think about it, this is a huge tax increase that would especially hit small business owners who have to pay the whole tax on their salary, not just half like they do for employees. When you combine the 39.6% federal rate and the 12.4% payroll tax, the effective top federal tax on earned income could be 52%. Add to that any state income tax, like California's 13.3%, and the top marginal rate for a small business owner could be over 65%. The bad news for higher income individuals doesn't stop with that. Biden also intends to eliminate capital gains on taxpayers who earn more than $1 million, effectively doubling the capital gains tax rate. Corporate income taxes, they'll probably rise from 21 to 28%, and minimum corporate taxes will be imposed. If you own a small business, you may want to consider pushing earned income and capital gains into 2020 to take advantage of the current structure. Doing this could save you a significant amount of money. And for 2021 and beyond, the new tax code would probably encourage taxpayers to keep their salaries under $400,000 and divert any additional cash flow that might have gone into salaries into dividends, rent, or some other type of non-earned income. Estate planning is also going to change for a lot of Americans. The Democratic plan would repeal the step-up in basis, meaning those inheriting a parent's appreciated property would be hit with capital gains or ordinary income taxes. This could reduce some inheritances by up to 40%. And those were tax-free or are currently tax-free. In addition to that, a parent currently can give $11.6 million with no estate tax, which many Democrats favor reducing to $3.5 million. The estate tax on amounts over the limit, which is currently 40%, could be raised up to 77%, almost double. So we have two taxes that could affect inheritances: the capital gains or ordinary income tax on gains, plus the estate tax on top of that. So let's give an example. Let's assume that mom left her 4 children an estate worth $10 million. And let's assume that her investment or cost, we call it basis, was $5 million. Today, with no tax due, there'd be no tax. Each child would get $2.5 million. If the cap were reduced to $3.5 million, there'd be an estate tax of at least $2.6 million, plus capital gains taxes of at least $1.2 million. So each child would receive at least $1 million less. Now, that's a significant motivation to reconsider your estate plan as soon as possible. The bottom line is this. The potential increases could especially affect taxpayers who have estates with appreciated assets, earn over $400,000 a year, or anticipate selling an appreciated asset in the near future. If any of these apply to you, it would be a really good idea to meet with your financial planner, accountant, and estate planning attorney. And I would say as soon as possible, because there are planning techniques that could save you and your heirs a significant amount of money in the event that the Biden tax increases come to fruition. But according to Paul Friedel, CPA of Friedel and Associates, estate planning advisors will be buried at the end of this year if Biden wins and the Democrats sweep Congress. So waiting until after the elections may be too late to accomplish anything in 2020. Thanks for listening.